Okay, folks, welcome to the midweek market wrap. I just want to do a pulse check of the S&P 500, the VIX, IWM, the housing sector, and a couple of stocks I want to review. Before we get into the charts, let's take a look at the economic data that was released today. Retail sales came in with a big beat. The cause was that we saw a decline in gasoline prices, which is a good thing. The prior reporting period saw a decrease in sales. Market expectation for a 0.1% increase came in with a 0.4%. Now, that's a big beat. Consumer price index came in negative. They're saying there's no inflation out there, folks. As a matter of fact, prices are going down. Did you know that? Prices are going down. You're not seeing inflation. Market had expected a flat number versus a prior number of 0.2% increase. Core CPI, that's when you take out food and energy prices, did rise. No shock there. Market expectation of 0.2, still a miss on that number, which is bullish for the consumer if you believe this number. I personally do not. At 2 o'clock today, we had the FOMC minutes from the August meeting come out. Let's take a look at how that played out in the markets. What you're looking at here is a chart, 5-minute chart, intraday chart of the S&P 500, the spiders. At 2 p.m. each month, they release the FOMC meeting minutes from the prior Federal Reserve meeting. What happened? There was a signal that the Fed could taper. And every sentence was caveated with the word could, might, maybe, this, that, the other thing. Anything but we will. Because they know what's going to happen. This market is going to crash. We are not growing on organic fundamentals. Take a look at this. Just because they put could taper in the coming months, plural, not month, months, the market corrected. It bounced off of the 3 o'clock lows, topping tails into the close. My guess is that we pull back on Thursday. Keep in mind that Friday is short covering Friday. The probability of upside on Friday is very, very good. So beware of opening up short positions on Thursday. Let's take a look at the daily chart of S&P 500. Pull back to the 1780 level, found a bit of support there. And that's where we saw the rally into the 4 o'clock close Eastern Time. Volume below average, but consistent. This is what I call a left-handed baseball mitt. Okay? Here is your 4 fingers here and your thumb with the palm facing out. Your left-handed baseball mitt. A very bearish sign. You saw it here, you saw it here, you saw it here. Okay? These are bearish setups. So please, the probability of continued downside is very good. I'd say more so on the IWM because we have put in a lower high. New members, please, cautionary tale. The IWM is loaded with the go-go stocks that you like so much. The triple Ds, the 3D systems, Yelp, etc., etc. Those stocks are in this index. They're not doing well. They're getting killed. And when you take a look at the daily chart of the IWM, a technical breakdown begins with a lower high. Prior high, 111.62. We rallied off the lower band of the rising uptrend channel, rallied up to 111.42, a 20-cent lower high. Now we're pulling back. We want to see now, will we hold on to the 108 level? And critically, will we hold on to the lower band of the rising uptrend channel? If we fail and we take out 107.14, we're in a new downtrend and you must stay out of stocks. You could even be short, but you need to start taking some longs off the table because remember that we are record high margin debt. Record high. It's like a short squeeze in reverse. When they start making margin calls, these brokerage houses, they will liquidate a guy's account in nothing flat at 2 p.m. if they do not put new cash into their accounts or if they do not sell enough equity to cover their margin call. So please be very, very careful. Now, the Federal Reserve said they might taper. So we saw the 10-year yield rally. What happened to the utilities? They crashed. Just that utility rally is done. It's completely done. Stay away from them. I've always mentioned that the utilities are the canary in the coal mine. And if the 10-year yield rallies as it did today, you have to stay away from the utilities. Next chart up is the housing index. Remember, $85 billion per month is getting thrown into the bond market in an effort to maintain rates at record lows. The Federal Reserve is losing control. They're losing credibility. They cannot control the 10-year yield as they once could. This is the price action on the housing index, the new home builders. My guess is that we will break down. I believe that in the coming weeks we will break down to below the August lows at 164.03. So stay away from your home builders. Triple D, 3D Systems. I sent out an update this afternoon. I wanted to recap this one, what I was looking at, and where the stock might go. We went short of it up here at about $83 and change. We covered at the lows of the day on Monday. Stocks have still sold off. I was afraid of the weak shorts rallying this stock higher. I still think they will. Stocks rarely go straight down, folks. Normally they'll pull back, find a support level, and then rally. And they'll try to take out the prior highs or not. Either way, you're going to get a rally. My guess is that we'll pull back to the $68 to $67.50 level. Let's drill down to a 15-minute chart. We were watching resistance here at $70 per share, and trust me, that resistance is still there. I had hoped for a pullback to $68 a share, could have then started building the position all the way down to $67.50 right here. Then the probability of a rally would have been pretty good. It didn't pan out for us. It didn't come down to our price target. We walked away. We did not chase. That is the discipline. So we might get a pop higher on Thursday morning because notice we closed above the upper band of the declining downtrend channel. So if we rally on Thursday morning, no shock there. My guess is before all is said and done, though, we will pull back to $67.50. Then we'll look to open up a position in 3D Systems and look for a rally up to prior highs at the $80 per share range to 84, 85 level, and perhaps even higher if it breaks out the new highs. But I'm kind of doubting it. Next stock up, Zynga, ZNGA. Here's the IPO price at about $15 per share. This is a typical Facebook type IPO. It was junk, fell apart. That was in the middle of 2012. It's been in the consolidation range. The high of the past year and a half was $4.03. Today, we made a high of $4.27. So in short, what I'm showing you on this weekly chart is that we are breaking out. So we like Zynga. I think Zynga is going to proceed higher. I think that we're going to be in this stock for several weeks to a couple of months with the first price target of $6 to $6.50. So expect an alert on Zynga. Next stock is Axle, AXL, American Axle Corp. I mentioned this on the week ahead commentary. We broke out on a weekly basis, but we pulled back. This is why we try not to buy in the middle of the day or in the morning, because the stock looked as if on Monday it was going to break out above this secondary downtrend line, and it failed. It pulled back. There were sellers up here. So now we're pulling back. We're testing the 1850 level. We may just start to nibble on Axle on Thursday with the hope that we get a rally off of the 1850 level. If we fail and we close back down below this primary downtrend line, what we'll do is we'll probably stop out of that trade. So it's critical to keep your buys small. That way you keep your losses small. Let's take a look at the intraday chart. All right, our slow stochastics are not looking good. RSI is not looking good. Looks like we have continuation downside move probable. Bottoming tails on the candlesticks do imply that we have support at 1852. What they may try to do is wash it out on Thursday, meaning they come in at the open and they'll just sell a ton of shares, trying to get it to break down even further. What we'll do is that if they try to take that route, we'll take that bet and try to identify some bottoming action at the near the open and jump in and look for a rally off the lows of the day. Remember, a lot of shorts in this stock. They'll get squeezed. That will be our catalyst to get moved higher. So the three stocks that we like near term, 3D as a long, Zynga, ZNGA as a long, but an intermediate term to long-term hold, Axel, AXL, for an intermediate to a longer-term hold. And that's it, folks. If you have any questions, shoot me an email, and I'll get right back to you. Have a great night.